Well, hello, everybody. Welcome to a cloudy freaking day in Austin. It's been rain. I mean, not cloudy. It's been pouring most of the afternoon. Um, all right, guys. What do we have? We have 20 minutes left in the market. All right. So let's go check the charts. This should be fun for me, too, because I haven't checked the charts since the morning update. I've been busy doing other stuff. And then I got involved. Then I got on my Discord, and we're having a discussion in Discord. And so I've been looking at stuff at that one anyway. Let's see how everything's doing. I guess I did check it once since this morning. It had bounced a little bit, actually, last time I checked it. And now it's kind of pulling back. All right, well, that's fine. It's kind of what we'd expect right where it's at. I think it's going to be slim pickings until it gets through there, and then if it gets up here and if it does happen to get through there, I think that it might be tough going again up around 580, 570. But we'll see what happens on this one. That's 30-minute. Let's just look at the cues on the 30-minute. Boy, the cues are riding that old Bollinger Band, aren't they? A lot of people like that as a signal when a stock rides the Bollinger Bands, or anytime the stock's on the outside of Bollinger Bands, watch out for it to get momentum in the direction of the Bollinger Bands. And this is obviously what's happened here. If you wanted to dip buy on the cues, this happens all the time. You'll see a pullback to the prior POC, point of control. 473 would be a decent place for a dip buy. And then underneath that, 453, somewhere around this open gap down here. But I would imagine buyers would be in both of those places. We'll see, though. We'll see. I've been surprised before. All right, let's look at Bitcoin. It's flat right now, I guess. Yeah. All right, Bitcoin pulling back to the trading area at 94, which is very comfortable trading to 94 for a long time. It broke out, but now this could be just coming back to check. This could be the dip buy on, if you like Bitcoin, anytime you pull back to a previous POC, some people like to use that as a place to enter back on the side of the original trend. So anyway, all right. So that's good. Let's see what else is going on. No, I haven't made my I need to call my brother-in-law. That's what's holding me up. I haven't set aside the time to call him. So no, I haven't switched this yet, but I will. I just got sidetracked on stuff today. Anyway, it's doing pretty well right now. Look at this. Look at this. It's doing great. Why would I want to switch it? I'd take this every day. I would take this performance every day. Y triple Q's up 9 cents, 9 basis points, whatever. GDXY up 30 basis points. A couple of them are hurting me, but not too much. Well, I like the way this looks. All right. Whatever. That's just the model portfolio. Let's see what else we should look at. Maybe the GPTY verse would be next on the list. Really liking this screener. Well, it's not on this tab, though. Where is the darn screener open at? I got too many darn tabs. Oh, this screener right here. Okay, and I've started marking the ones that are wheel candidates. I'm obsessed with, and all the wheel candidate means is between, in this one, the scanner is between 15 and 45, has high IV and tons of liquidity and option volume. So, I mean, it doesn't necessarily mean that you want to do the wheel on these, but these are ones where the math could work out, or let's say you've been thinking about buying Southwest Airlines anyway. It's a good company and whatever. You're going to buy 1,000 shares and you got some money. Well, this has a 90% IV. It's on the wheel list. Even if you don't want to do the wheel, you might want to sell some options to acquire it. I mean, if you're an option trader, if you're someone in here, you might want to do that. Not just the random person. But anyway, but I really like this this list. And what I like about it, it updates and stocks come in and go out of it to pay, based on IV. Anyway, all right. Let's see what else we have. See if the dark pool's working. The one thing I'm disappointed with on this software, sometimes the dark pool doesn't work, but if they would just get that, worked out. All right, let's see what else we can talk about. There's 6 of you guys here. Anyway, I appreciate you guys for showing up. All right, let's look at the GPTY verse and this kind of stuff. GPTY verse. Well, let's just start here. Yield max land. It's the same thing every day. I mean, whenever they're down a little bit less than their line. Whenever they're up a little bit less, but it's pretty close. Sometimes they outperform on the upside or the downside, but it's usually an outlier and not typically something to worry about. Today, Airbnb is outperforming on the upside, meaning it's up a lot more than its parent. OARC is outperforming on the downside, meaning it's down a lot more than its parent. But day in and day out, these things get 60 to 70% of the upside and 60 to 70% of the downside. Pretty much. I mean, we sit here and watch them, right? They're just peeling off some of the volatility and paying you a yield out of it. So anyway, it's to each his own if you like that kind of stuff. All right, let's check out the Alti grid. Okay, that's the Alti allocations. This is the Alti verse. So Mara and ASTS are the problem children, I should say. Reddit's looking good, as is HIMS. HIMS has a consistent performance. HIMS is hard to beat. Tough nut to crack. All right. GPTY verse. Now, this is the GPTY allocations. Now, I'm going to be sure to download the latest allocations at the end of the day, and hopefully Jay and the traders got this negative cleared up over here, this negative 10% cash. We'll see. We'll check in on that tomorrow. All right. Probably something got exercised, but something else hasn't cleared yet. There's probably a difference in the clearing or something. I'm just guessing. All right. Well, Tesla looks really good today. When we talk about option trades, let's go look at I gave you guys a Tesla option trade, and I didn't do it, but man, I should have. It is a good-looking trade, and it's going to work out great. It is going to work out great. All right, so there we have LFGY. Now let's go over here. This is the TSM, so this would be Chippy's allocations. We also have a negative over here. Hopefully they'll get that cleared up. Here we have the GPTY. Gosh darn it, you got to be kidding me. Didn't we just see Tesla up 2% somewhere else? Gosh darn it. Well, it's whatever. That's an old shot. Gosh darn it. All right. Here's the Alti grid. That's the Alti allocations. There's the Alti grid. Here's LFGY allocations. Here's LFGY's grid. This is a bad one. Or no, that's actually GPTY's allocations and GPTY's grid. Okay, I guess that's not bad. I got a bad one. Which one said Tesla was up? Not this one. Tesla's definitely down. All right, and here's Chippy's allocations, and here's, I guess they're all right, and here's Chippy's results, let's just call it. Boy, this ON Semiconductor not looking very good. Probably had earnings. All right, what else you guys want to talk about? Oh, yeah, I promised somebody an AMD option trade. Okay, let's look at earnings stocks. Who has earnings today? Nothing, that's just one of those days. Nothing's working out. I thought I had this open. Earnings up. There it is. All right. Well, we got 10 minutes, so I guess I better make the trade fast if you guys want to. If you guys are going to do it, but I've showed you a million times how to do a 3-leg. It's pretty easy. Let's just we'll look at it again though. Well, that's all I would do is do a 3-leg in AMD. That's all I'm going to do when I get there. But if you want to do it ahead of me, just go do a 3-leg in AMD. Make yourself as big of a buffer as you can, and try to catch 10 or 15% yield. All right, maybe AMD doesn't have earnings right after the bell. So, so we got HIMS and Planeteer today. Okay, no AMD, at least not after the bell, and AMD's not in the morning, so I don't got a rush to do it. We'll do it some other time. Or there's ADM, but not AMD though. Okay, dash. Trying to think if any of these things look interesting. Celsius Holdings has tons of liquidity. Maybe we should do one. Yeah, and it's $30. I like the ones that are inexpensive because you don't have to risk a lot. I'm gonna do one as fast as I can, and well, let's just look and see if it's possible. I'm just going to kind of do a basic one. We'll do the old right there. Just something, just keep it simple. Buy call. Just super, super little basic one. Liquidity's there. Let's see if the rest of the numbers justify it. All right. That's a fine looking trade right there. Just a shot at earnings. I mean, and it's a bullish shot. Don't do this if you don't think that their stock's going to at least be stable through earnings or hopefully go up. All right, here it comes. Copy link in case anyone wants this. Like I said, I'm hoping you guys just kind of are picking up on what to do. What the heck? Who's that dude? What the heck? Gosh darn it. All right. All right. So bulls for high IV. Okay. Well, let's look at that really quick. Is there anything else we need to do before the market closes? I'm just trying to think. Did I show you guys a Planeteer trade? Does anyone want to? I could do a bearish Planeteer trade in case they miss, so I could show you guys how to do that. But let's try this. I just want to do a different type of Planeteer trade just for fun. Just for fun. Something like that is what I would do if I wanted to bet against Planeteer. That's your best bearish, in my opinion. Now, it doesn't get an outlier move. It doesn't do it if you get away, but you pay yourself $152, take your wife to dinner, easy peasy. Just Planeteer can't go up more than 5% this week, and if you don't like this way, you can do the reverse. But all right. So bull for high IV. All right. Well, let's look. Let's look at FinBiz and see what that says. Where's FinBiz? There it is. Oh, yeah. This is the one I was asking you about, Ethan, where it was the one that got extra upside or something. Wasn't this? It's not coming. Oh, there it is. Now bull is Webull. is in the stock. I thought that was that ETF we were talking about the other day that bought call options. So it got extra upside. I want to do a review on that one. Boy, Webull doesn't look really, this one hasn't been doing that well, has it? Looks like some of my trades sometimes. Somebody's holding the bag on that one. Come on, where is... All right, it's running poorly for some reason. You guys can probably see that. Sorry, I apologize about this. I'm just going to go get the Wi-Fi extender. It's out. I'm just going to go get it. Hang on real quick. All right. See if that works a little better. We'll see. All right, guys. What else should we talk about? There's 5 of you guys on here. Well, let's look at... I want to see if this Planeteer trade is going to work out. It's probably the wrong way. We probably should have just done it facing the other way. But this would be a good way for somebody that's bearish, for somebody that thinks they're going to miss, but maybe not miss bad. We were on fire last week, and the ones that we were doing in here, look at that, on the ones that expired Friday. But what are you going to do when the market's up 9 days in a row? You better look like that. The only ones that were down, the only ones on this whole page that were down were hedges. Like this one is, I showed you guys the diagonal put spread to do. Anyway, it's not in there. But the only ones that are down there are hedges. But that's what happens when you go up 9 days in a row. I wish it was that easy all the time, right? We'll see how this week goes, though. We have an earnings on this one. We have a Planeteer, but then I also have a bullish Planeteer, or what is? Oh yeah, I forgot I showed you this one at lunch. So we have a neutral Planeteer, a bearish Planeteer, and I'm sure I've done a 3-leg somewhere, somehow. So we have the whole gambit covered here. My Lord. My Lord. All right. All right, guys. So let me show you some other stuff I was looking at. So in Discord, we have lots of good discussions in Discord. I have the best Discord. I think anyway, and it's free. And we just have really good people. We've hardly ever had a disagreement in there, maybe once, but other than that, it's just been a great, wonderful place to hang out. So please join us. I think I put the link in the description. But we're going back and forth. So I made a video a few days ago, and I was extolling the virtues of high yield funds, and I was especially high on what I was trying to show in the video, or what the video did show. It showed that the really high yielding funds like the Defiance and Round Hill, because you use a lesser allocation, even though people say they're more dangerous, when you actually go to allocate them and look at it and compare it on also you go look at the yield and you make the yield equal. You equalize the yield, and they really aren't so scary. And that was the main thing I was trying to show. But then Tom in Discord mentioned that I should have done it just testing it against just selling stock. And I should have. And Tom also reminded me that oftentimes just selling stock comes out ahead of option strategies. It doesn't always, but it does lots of times. Anyway, so that's what we're discussing in Discord. So, and I was trying to show people that Defiance actually isn't as dangerous as like QYLD. When you equalize it, that actually isn't. When you equalize and you're using it actually like I would say you're supposed to. But I wasn't trying to show people that Defiance or that the covered calls were a better way to do it just generally. So, and I've made some notes about this. Okay, so Papa Convexity always, my dad always warned me from staying away from always and never. And he used to get so mad. Because when I make a broad generalization or something. Anyway, but so I don't think anything is always or never or, the best thing to do. So that certainly goes for covered calls. It's one of many strategies you can do. And lots of people in retirement just sell stock. That's also a legitimate strategy also. It's just not for me, but I think it's a personal choice. But that it got me thinking about it. But yeah, I'm trying to stay away from broad generalizations, but I just like the idea of selling options, as you guys know. I mean, and I have a hang up on selling stock, and I don't like the idea of selling stock, and it's a personal thing. And also, it's kind of a family legacy to leave some to the next gen, or leave your money to the next. I don't want to spend the next generation's money. I mean, that, the previous generation left me some money, and I intend to leave it to the next generation. The covered call strategies it makes things like that more possible, because you can generate income off a pile of money without having to necessarily invade principal. It's just that's a personal hang up. There's if you're just looking at the math and the total return, the dollars and cents wise, yes. Sometimes you come out better just selling stock. You just go in retirement and just sell stock, just sell 4% a year. I mean, but I was just going to say the best way I know of to create an income is covered calls. I don't know about real estate. I've never been in real estate. Covered calls is just my way of thinking about passive income. There's also, bonds are great ways to do passive income. Corporate high yield bonds can be wonderful tools. It's not a world I'm in. The business development corporations, there's tons of different ideas out there. I'm just happen to be comfortable with options. I'm not comfortable selling stock. I have a family legacy of leaving the next generation really better off than the last generation. So I'm just, here's the other thing. I didn't just make up the covered. It's not something I came up with. Wealth managers have been using this for forever. Jay uses covered calls. They do covered calls for institutions, and it's a very common way to get people money. And actually I've told the story a million times. The whole reason I know about this is because my grandfather didn't want to sell his stock, and so his broker showed him how to do covered calls. And he ended up, I don't think he ever sold his stock because he wanted to give it all to my dad. So he did sell some to donate some money to the church. But by and large, the idea was you try to save, the stocks to be saved, not to be spent. It is just a family. It's a hang up. I saw him do it, and I've always admired him. So in my mind, I probably thought that's the way to do it. But like I said, I didn't make it up. Jay does cover calls. Wealth managers do it. It's a legitimate way to get income. And I also thought about, after I'm gone, I want my heirs to have income, also to have a little bit of income and not just wealth. Wealth is fine. Having growth assets is awesome. But but nowadays with free commissions and options and different ways, you could do some type of strategy like, 95% growth and 5% in, or for on a larger amount of money, 2% in one of these funds, and you spit off enough money to pay the heirs their, so the heirs have a little income, and but without messing up the prospects of the future prospects of the family. But I also wrote down it's not like it's the only way you got to do it. It's just a choice. It's just a choice. When I first started this, I was trying to show people that a lot of people had misconceptions. I was just trying to disprove misconceptions. One of the misconceptions out there is that Defiance is ultra risky. In fact, it isn't when you use it in some of the examples I showed. So I'm usually trying to bust that myth. But on the XPay, okay. So let's talk about just selling stock. What do you guys believe? Here, let's do a Twitter poll. In retirement, if you had to do one or the other, would you sell stock or do covered calls? And it doesn't matter, but I'm just curious. I'm just a covered call guy where I'd always try to do that first. I realize that if the covered call program you have doesn't make enough money, the market's down, you may have to sell stock, but I'm looking at selling stock as more like of a backup. But and maybe that's wrong. If I was just concerned about total return, the total return often is better doing it the other way. So, all right, what else do I have to talk about? Well, anyway, but like I say, if I've ever given anyone the idea it's the only thing to do or whatever, please. I mean, of course, we always talk about seeing your own planner and stuff, but seriously, there's a million ways, or not a million. There's 4 or 5 different good ways to get income out there. Covered calls are just one of them. So, I don't even know good way, but I I definitely don't want to do this because I said so, and then they lose money. I mean, that's definitely not what I'm after. So I try to always qualify this with saying, it's something that I like and it's for me and maybe not for you. But, here's the other thing, but okay. But back to the philosophical disagreement or the philosophical discussion between Tom and me and a couple of other guys in there. I think there are ways to kind of settle the argument, and I have a solution. So one thing we can look at, there's a fund that does this exact same thing that sells stock, and we can compare it to Defiance and see how it did. And I've showed this a million times before. Defiance did better because it has quite a bit better too, because it has a big buffer especially to the lowest point in the pullback. But here's the thing though, WDT pays about 40%. XPay only pays 20%. When I make an apples to apples comparison with XPay, which is the strategy of just selling stock. That's what that fund does. They just sell stock and they pay you return to capital. It's tax efficient. But if you compare XPay, which is maybe a solution like Tom might like, he wouldn't buy the fund, but that's more like what that side's advocating is XPay. Okay. And my side would advocate, to sell, but only as much as income you need. Right. And so the target funds maybe work as a good example for that. So let's compare XPay to SpyT. 20% income, and no one needs 40 or 50 or 80% on Greenthie, but 20% on SpyT. That's not too bad. It's the same thing that XPay is doing when they're giving your own money back. Let's see how this works out. When I'm trying to kind of quantize the argument, it's the same thing. Look, there's really, here's the other thing, Tom and Scramble, that my theory, and I think you guys agree with me on this. There's no free money. Because there's no free money, if one of these ways was a lot better way to do it, if it was a lot better way to sell options, or if it was a lot better way just to sell stock, I think that everyone would do it that way. I don't know. And the market's efficient also. I think when you compare them and when you do back tests, they come out about the same. So like on this way, it's 20% selling options, selling stock. 20%, and it would make sense that it's about the same because it's, it would make sense to me anyway. So, and I want to try to prove this some other way. So let's get in the back tester and let's go back. let's go back here. Okay, so what I did is I did our guy. I did our hero down here. He's got 500,000. He needs 10,000 a month. That's 120,000. That's 12%. That's an insane amount. And I made it an insane amount on purpose to show, just to try to show something. But that's an insane amount. So let's see if we do that, and we'll test just doing just taking it out of just owning shares and selling shares along the way. But let's test that against Defiance, Round Hill, and maybe Goldman Sachs or something. So, but now also, this is a test that's only the last year. So it's not as good of results as the one that I showed you the other day that was the past 2 or 3 years, because it got some of the bull market in it. The past year, isn't going to have as good of results. So it's a different way to look at it. Okay, so we'll just do 60-40 for the allocations. Here's GPIQ. I mean, it's down 17%. But now you got your money out. Remember, I'm trying to think, what are you? You're withdrawing 12% is because of you. 12% of that is because of you. So but anyway. So, okay, but that's if you use one of the good funds, one of the less risky funds. That's a Goldman Sachs, low expense ratio, good fund, down 79.9%. I generally kind of advocate for the higher yielding funds, more like a Round Hill or Defiance. The next one's Round Hill, so we'll see how that looks. So 60-40 of Round Hill got you, you're down 18.5%. I mean, you got your money, but it hadn't been a great year. So, the Goldman definitely worked out a little bit better, even in the allocation. And then Triple QI, of course, is down the most. It's 21%. Of course, it's the most risky. So then you go here and you look at the portfolio income. Once I normalize for income, see, the thing is, person number 1 and 2 don't have enough to retire if they don't want to sell stock. If they're like me and they're hung up on not selling stock, they don't have enough, but person number 3 is the portfolio has enough passive income to support $10,000 a month on $500,000 without selling stock. In theory anyway. But this proves, I was going to say, here's the fourth thing. The fourth column on all of these, it's not like I'm hiding the just selling stock. The fourth column is always just selling stock. That's what the fourth column is. It's just the benchmark, and it's the benchmark after it's just selling stock. That's what and it's always been that way. So the fourth column has down 17.4%. So yes, the fourth column even outperformed all the other ones. And the fund I like performed worse than the fund you guys like. Okay. However, the fund I like pays like 3 times as much as you guys' fund. So once I'm not going to do this because I've showed it a million times. Once I normalize for income, they all return within a point of each other. I mean, it's because there's no free money. I just think there's I need to think of a better way of expressing that. But anyway, and I've done this a million times. I'm not going to do it now because I'm not going to bore you. But yeah, when you normalize for income, in other words, you adjust the share count. So what you're going to have to do on these 2 other ones that don't pay as much, you have to allocate a lot more to get you your 100,000, 120,000 you need. And by the time you do that, it hurts your total return. And the other total return is, this is the plan I like better. Here's the other plan. I just like being, the other thing is I just want as much of my money in growth as possible. And if I have a fund that pays, if I can one allocation, if I can stay 90% in growth, but have the income I need in retirement, but another allocation, I'm 80% in growth, but have the income I need in retirement, I take the 90%. I just like more. And I like the flexibility of anyway, but I think Scramble, we had a good talk in Discord, and Scramble, I think, kind of agrees with me. But Tom makes good points too. But Black and White, Tom's usually right in black and white, and he is this case also. I'm going to show this one other way, or I guess I already did show it this way, but this way pretty much proves it. XPay versus SPY-T. Let's just do this. Let's do XPay versus SPY-T for the past since inception. I bet they're the same because there's no free money. Yeah, they're the same. I mean, you know, it actually looks like XPay was doing a little better on the way up and SPY-T did a little better on the way down. I don't know. But anyway, one's at 24.1 and one's at 25.6. You know, that's the good thing is I guess it just comes down to personal choice. Some people like options. You do options. Some people like business development, corporate, whatever. You just do what you're comfortable with. You know, I think a lot of people would rather just take some money out of the stock market and buy a duplex and rent that. That's a good way to get some passive income in retirement. Have something you can manage and touch. So it's not just like stocks are the only way to do it. You can also use, like I say, real estate. And I've always kind of been jealous of people that knew about real estate and had real estate. It always just seemed so profitable and cool to me, like such a good idea. And I've just always wanted to kind of secretly be in real estate. I always tried to talk my dad into getting real estate, but my dad's just all about liquidity. He's just he likes liquidity. And like he always says, the New York Stock Exchange is the most liquid asset in the world. You can have your money the next day, have your cash. You can have $1 billion and you sell your stock or T+3. It used to be T+3. In 3 days, that $1 billion will be in your account. It's essentially cash. I mean, it's close to almost, as far as the liquidity of it goes. So that's something else. So that's the other thing. I'm real hung up on the influences of my dad and my grandfather. They taught me a bunch of stuff that may not even be true. So, I mean, but I'm just telling you, how I got that way. So anyway, all right, guys. Okay, what's going on here? I'm missing the thing. Yes, Alti. Check out Chi. Okay, we'll check out Chi. Planetary earnings is out. Oh, gosh. All right, well, Planetary earnings is out. Let's, I don't really have a good source for after hours quotes. Tasty Trade, maybe. No, that's the bad one. Hang on here. Let's just look this way. I like that pullback buy in Bitcoin. Pull back and check the last. Oh no, you got to be kidding me! Look, it's down to 120. That's not too bad. It's 3 points, 15%. That's nothing. Has somebody watched him and figured out? You know me, all I care about is how the market reacted to it. What actually happened? I mean, I care about it, but more so, I care about how the market perceived what happened. So 8 minutes ago. Expected second quarter adjusted income, blah, blah, blah. Let's go like this. Let's go like this. All right. So, I mean, they beat every quarter. Last time it was 14 instead of 11. They haven't put, I guess it's 13 is what they estimated, but maybe it was under 13. I don't know. I don't see where they're. Huh. All right. Well, this Planeteer is freaking amazing. Let's look for a dip buy on it. Not like it ever dips, but see right here, it's always right at the last POC. This last pullback didn't quite get to the POC. Well, I mean, yeah, down 3 points. It could be up by the morning. 3 points is nothing. I mean, it's nothing, right? On a stock like that, might as well be up, basically. All right, well, Hey, you know what's good though is that no one did it, but the Planeteer, the neutral one, that big broken wing butterfly would have worked out great. Hopefully, maybe somebody did. But this is actually looking like it is just going to be ideal. This, if it stays like this, or if it's like it is right now, it's pretty much ideal for the trade I showed you guys. Well, that one too. Yeah, 120s right there. You know, so you could still drop 5 more points before you drop off max profit. Maybe somebody did this trade. Did you guys do any earnings trades? Who did earnings trades? If you did earnings trade, tell me about them. No, they can't exercise after. Well, we'll talk about that in a second. Okay, let's check out Chi. Ah, shit. Come on. Calamos convertible opportunities incoming. I've seen this one before. I think probably when I was on Calamos' side, I did a story on them once. So convertible opportunities. So this is some kind of corporate bonds where they do, which in a corporate bond, convertible bonds are kind of like options, or it has an option, you know, it's optionable kind of, I guess. Down 15.6% year to date. Now you got an 11% dividend. So, I mean, you're getting your own money back at this point, but, oh, well. And these are closed-end funds. So here's the thing. Ethan's been asking me on a couple of other closed-end funds. The last one's a closed-end fund. You don't get a positions on a closed-end fund. There's no position. So there's less transparency and at least in FinViz. Maybe I could go to their site and see what their positions are, but at least for FinViz. So anyway, all right. What else is everyone talking about? PLT. Okay. Should have. Okay. Oh, your dumbass bought cover calls. You should have exercised earlier. Sold at the high of day. Oh, the dumbass that bought your covered calls. Yes. Nice. Yeah. You're talking about the guy that you sold your options to. Nice. That you sold your calls to. Yeah. Yeah. You don't like earnings trades. Okay. It's not the earnings part I like. I like the volatility crush, the 1 day volatility crush. Now, it doesn't guarantee you make money, but I'm always trying to combine the fact that the market kind of drifts up over time and volatility drifts down, especially after earnings. So when I put on a bullish 3-leg, you catch the sideways or up action, and then I just put on one of those something out of the money, you know, then I just hedge my own tail risk. I mean, that's my strategy. Oh, so PLTY is now at 65. Gosh darn it. You got to be kidding me. You got to be kidding me. Okay, well, yes, that's a big deal. So see, I told you guys you should have done that butterfly. Oh my God, that butterfly would make you so mad because it dropped that far and you just would make $115. You just get on something like that, you wanted a short freaking trade. Holy cow. Even right here on delayed, it's dropping to 117. Gosh darn it. Wow. That's something else. That is something else. This darn dark pool's making me mad. Because I would love to check out and see what see if people have been trading this all day. Were people buying up for whatever? Let's do it in the visualizer, maybe the visualizers. DraftKings. Good goodwill candidate. All right, so here we have Planeteer. No, this doesn't do after hours because it's still showing. I thought maybe this software, this is just real time only. Wow. So it's really at 68? You got to be kidding me. It makes a perfect case for a 3-leg. Can you imagine doing a covered call on that son of a gun? Can you even imagine? Yeah. All right. What else is up? I mean, yeah. I wonder if that can knock the whole market down. Probably it's not like that. Nvidia could do that, but not Planeteer. But wow, yeah. Sorry about the bad prices on that. I mean, YieldMax how is YieldMax going to make a ton of money on PLTY this month? Just because people, well, yeah, I mean, I think probably every month though. Okay, now I still want to talk about this extra hours. Okay. But no, retail can't exercise after hours. If it's a market maker, no one can really exercise, but stuff can happen to it after hours, but you can't do anything to it. Yeah, no, and generally avoiding earnings trades is good. Like I say, I'm trying to, you know me, because I'm a math guy, and it's not like I figured it out on my own. Tasty Trade does it, you know. But I'll tell you this though, Tasty Trade does too much neutral stuff. They don't have, or especially Tom, they're too in love with selling premium. Sometimes you need to buy a little premium, especially when the market's below the 200-day moving average, or especially when the VIX is the VIX's term structure is inverted or in backwardation. You actually have a tailwind to buy options. So I think that's the one thing that I'm trying to teach people that helped me a lot, that I don't think is out there enough, is selling options isn't the only solution. It goes back to what I was saying in the notes I was writing about my thing. You know, my dad always cautioned me to stay away from, and by caution me, he told me I sound like an idiot or something like that, you know, but he usually cautioned me to stay away from always, never, you know, just broad generalizations. And I don't always follow his advice, but when I have, it's been good. All right. So what is going on, Mark? So both E-Trade and Thinkorswim. Yeah. Well, whatever reason, it's just, I'm just got a free trial on that Trading Vision AI thing. It doesn't have after hours. I'm fine with that. And I used to pay for quotes here. But I let it lapse and I haven't renewed it yet. I mean, yeah, I need to put live quotes back on here. It's ridiculous to have a station not have live quotes. All right. So I'll get live quotes back on here, but this is the first time it's been a problem, because I'm not trying to, you know, run a trading station. I'm not giving out trades and stuff. I'm trying to be more like education, and here's the theory of options. Here's how you do this. Here's an idea. You know, now go figure it out. But you guys but I don't know what stock to tell you to get. I mean, that's up to you guys. You guys tell me what stock to get, and we'll find the way to maximize that's what I'm good at. I'll find a way to maximize your potential or to hedge it. You know, that's what I kind of like to do. And so anyway, but I'll get live quotes again. I apologize. It's ridiculous. The other solution, I should have had CNBC on in the background, and I could have just been looking at it and whatever. All right, guys. It's a rainy day here in Austin. And I'm trying to think what else I need to get done today. Hey, Ethan, I want to do a review on that ETF you asked me about the other day, but it involved leverage somehow. Remember, and I said, that's right up my alley. The name was like Alpha Premium Extra Upside Monster Fund or something like that. It hit every freaking demographic in my mind. You know, the stuff I like: extra, upside, convexity, whatever, asymmetry. It had all of those. Try to send me that fund. I want to try to. We were also talking in Discord about the future of the station, and I was saying that I'm thinking about switching niches at the station, or maybe refining the niche a little bit. And we were going back and talking about it. But if I refined it, that would be one thing I would want to refine it to, is maybe where I just did ETF reviews, or where I mainly concentrated on ETF reviews. Quit following the day-to-day yield max and stuff, but and especially the ones that are too complicated for most influencers to cover. But the ones that involve futures and the liquid alts. So I will do some more. We're going to see some more reviews, and probably a little less of this day-to-day yield max stuff. But it's up to you guys. You guys also, it's kind of what determines what I do every day. But I get in here and you guys have questions, and based on the questions, sometimes it changes which direction we go. But did you guys get what I was saying about that? About the covered calls? If I ever have given anyone the impression that they're the only way to do it, they aren't. Just they're just a way to do it, and they're a way to do it. And I mean, to be fair, if it really was just down to total return, yes, oftentimes just selling options. I mean, just selling the stock comes out about the same, or it comes out better. But I'm going with the theory they're still about the same. When I'll try to prove it. You don't have to believe it just because I say it, but just because of the no free money, lots of times when you try to do stuff two different ways, the result in the market, the results come out similar. Especially in options, that happens a lot in options. Yeah, I'm showing 113 now on Planeteer. I wonder if it's bounced to 113 or if it was. Where could I get a live Planeteer quote? This is ridiculous. There's probably a chart somewhere that has Planeteer going live. And it's whatever. But yeah, back to the cover call stuff. If I've ever given anyone the idea that they're the only way to do it, or the best way to do it, and I'm sure I have given you the idea they're the best way to do it. And yes, that's my opinion. But it doesn't all. But like I'm just admitting, it doesn't always hold up under scrutiny, and it's up to you. You do you. All right. Anything else you guys want to talk about? Oh yeah, thank you, Ethan. Thank you very much. I'm going to show everyone what Ethan's talking about real quick, just because we were talking about that. So I asked, these are the funds I'm going to review. In case anyone's watching is wondering what the hell. Ethan brought a fund the other day. Yeah, look at this. Daily Delta Q100 upside option. It has everything. Daily, yes. Delta, I love it. It could have said Gamma, Theta, whatever. Q for NASDAQ 100, NASDAQ 100, upside, all about it. Option, strategy, ETF. It just doesn't get any better. Anyway, I'm looking for something to do after the market closes. I'm going to review these two funds. So yeah, thank you, Ethan. I appreciate it. But plus I'm really interested in, I love these types of funds. Well, it wasn't that one, but oh, hang on. I clicked on it, but for some reason, all right. All right. This is really new. We don't know anything about it yet. It looks like they own somehow they own the NASDAQ 100, and they have more than 100% of it through leverage. But I can't. Anyway, I'll do a full review on it, and we'll talk about it. But man, look at this bounce after the pullback. I mean, granted, it fell all the way in 2 days. It fell from 28 to 20. Now that's what leverage does. I mean, it just, oh my God. I mean, that's like 40% top to bottom, and from between. That's why I always say the less is more with these. I mean, the tiny, you use small allocations because these things are crazy volatile. But now look at it on the upside. It went back from 19 on like April 7th to here we sit at 27. Holy cow. That's incredible. The other day when we looked at it, it looked like they owned the VTI. They owned, it wasn't the SPY, but they owned some type of total stock. And then they had out of the money call option. And that looked like they had about 110% coverage. But when I do the review, we'll look, in other words, like they should get about 110% of the upside. But I would say, I mean, they're doing pretty well right now. I mean, the market's up also, but the market's not up from 20 to 28 equivalent. The market's more up from like 22 to 26 or 22 to 24. I mean, it's still up, not like that. What was the other one? The other one was called, well, I'll look at it later. You guys don't really care about this much as I do, probably. Gosh darn it, Bitcoin's, Jesus. Okay. Or of course, Bitcoin, hopefully it's not falling over into Bitcoin. I wonder if the market knew about this beforehand, because the market topped out, it's been pulling back since this morning. All right, let's see here. I could see how maybe MicroStrategies would crash Bitcoin if they missed, but not Planeteer. That's not really a Bitcoin play. I mean, directly, is it? Let's see. Let's look at Bitcoin futures. Or we'll just look at Coinbase. Did we hit 100 the other day? No, almost. I mean, if we go with the theory that the smart money is now Bitcoin, risk on is now Bitcoin, because all the Trumpers and the tech bros that are pretty much running things nowadays are invested, are Bitcoin connoisseurs. Maybe the market's due to pull back a little bit more, because you can see Bitcoin topped out on Friday. I mean, one day before and pulled back, but also maybe the market was just too high and it needed a chance to pull back. I please hope some of you guys did that trade I showed you with the puts, not because I think it's going to crash, just because we're so high now. Puts are really cheap. We're in a kind of a tough situation. If the wrong tweet or something comes out, it is possible that something bad can happen. So I just think it's not the worst time for a little protection. This orange box, the top line of this orange box was where we were before the tariffs were announced. So once the tariffs were announced, we traded under the orange box. We traded up to it. And then after the tariffs were canceled, we went right through it on the other side. So right now I'm going with that it's support. We'll see. We also have this open gap down here that I do think will be supported between 556, 557. That would be a decent dip buy. Might get a chance in the morning. Let's see what ES is doing. ES is down 3/4 of a point, like Ethan said. I mean, ES isn't down to the level yet where the dip buy level from the gap the other day. On ES, it's around 59. Around, call it 5,600. Looks like a decent dip buy. I mean, boy, you could also maybe, like we talked about, the pullback to the prior POC point of control. It's 55.37. That'd be those would be my two. In fact, I am going to buy the dip if it gets there. I'm going to try to anyway. The last time it got somewhere that I was going to buy was right. I was going to do something. Was right one of these days. I've been looking at an area forever. I forget where it was, but it got there overnight, and then the next day sold off before I could do anything. I forget where it was, but anyway, even if I didn't do anything about it, I still think it's important to know where it was, and I still try to follow it. All right, no, not short PLTR. Should have shorted PLTR yesterday. I mean, now not at it, anyway. Hey, but Ethan, I'll do Q up and Q down later. Be looking for that, or any of you guys that might like that review. I'll try to make a review. I made one on SBAR the other day, SBAR. I tried to do a really good job. I had slides. I was real serious. It was very organized and put together. And I've tried to do better jobs on the reviews. So, all right. So what's Mark saying? Mark is saying, Max, I do cover calls on PL2I because I own the shares. In April, I made $24,000 between the distributions and the calls. Yeah, nice. Yeah, and I wasn't making a case against covered calls. I was just going off something we were saying in Discord. Just going on the, I'm just trying to reassure people or reassure myself that I'm not too in love with covered calls, am I? I mean, maybe I am. Anyway, but no, not short PLTR. And even if we were going to short PLTR, don't short anything. We buy puts, right? Shorting is the, that's, I couldn't even imagine when you short something, you have to, I don't think I've ever shorted anything. Maybe it was a part of a covered put to exercise on yeah, maybe technically, but not like on purpose. Not on purpose, but I have run some reverse wheel type stuff. So I guess I have. All right, guys. Well, I'm gonna get out of here, I guess. I promise I'm going to make that video tonight, and we'll see where we're at tomorrow. But anyway, I hope you guys like the extra conversation on the covered calls. But all of that stuff that I was just trying to say, pretty much, a lot of that stuff is probably personal hangups. And I've always tried to say this. Had I been a bond trader, and my grandfather had been a bond trader instead of an option guy, I'd probably be a bond guy, and I'd have a bond YouTube channel. I just like talking about what I like to talk about. All right, guys. I'll look at this HEDJ. Put that in Discord. We've gone on long enough. Put that in Discord, and or put that one for next time, okay? We'll check that one out next time. All right, guys. I appreciate y'all. We have to leave something to do next time. So that one will be first up next time. All right. You guys have a great day, and I will talk to you later. See you, Mark. I appreciate you, Mark. I enjoy you guys enjoying my content. I really enjoy Discord and our